Hey Steve, how's it going today? Happy Monday.
Thank you. Yes, a Monday it is.
It is a Monday. It is a Monday, and a busy Monday it has been for certain. Want to thank everybody for taking the time to come here, myself and Steve today.
Muted.
Before we get into the good stuff, always got to make the lawyers happy. So just want to make sure everybody that's in attendance today is aware of the fact that we are a provider of information. So all of the things that we share here with you today are strictly for educational purposes. If you do need advice, financial advice of any type, there are plenty of registered people out there that can help you out with that. So please seek out a registered individual if you are seeking investment advice, things of that nature. All right. I think the lawyers will be happy with that. Before we get on to the itinerary today, probably a lot of new people out there since we are conducting the open house today or the test drive all week. Just want to make everybody aware of the fact that not only do we have the best technology in our space for scanning the markets, but we've also created quite the community around that technology, which is very important. So, of course, on Mondays, it's myself and Steve doing office hours. Steve follows up on Tuesdays with Andy in the trade of the week. And then on the Q&A demo, that's on Wednesdays, and that's typically Dan and Brad. And then we round it out with Andy's studio, and I write shotgun with him. So webinars going on Monday through Thursday. In addition to that, we've also got the wonderful trading room hosted by Barry Anderson. So if you haven't been taking advantage of that, you might want to start doing that. A lot of good quality information in there. Barry's right on the spot with his moderation. All right. So moving right along here, quick look at the itinerary. We're going to let Steve do the market recap here. We're going to talk about Holly, and while she wasn't super active today, boy, she pumped out some quality results. Got two different examples of going risk on with a couple of trades, which seems to be a little bit of confusion about that topic, so hopefully this will help clarify it. And then if we have enough time today, I know that we're probably going to have a lot of questions, but I would like to get into what unfolded in the overall markets today, because perception of selling, a lot of red out there, gap down, never made it back, but some very interesting things to point out about that. So Steve, if you're ready, I'll just pump it over to you and pass
Sure.
take a look at the overall stuff here.
Sure, let's take a look.
There we go.
All right. Screen one. All right, you all should be seeing a copy of the SPY. I'll make it nice and big as usual.
Yep.
Great. You know, some of these lines we could probably go through and actually start to disavow here. Many lines from the back. I'm going to go ahead and take this one out too, just to kind of see what we're working with. You know, this was the range that we had been range bound in for a while. We popped out of the range, back into the range, and now we're 2 days back out of the range again. Primarily, I think the catalyst was the employment numbers last Friday. Popped the Dow back to 2,000, popped the S&P back up out of its range. So today didn't really give us much. We call that a doji. We basically closed right where we opened, so just a lot of sideways action and noise. But the good news is we did manage to close above this resistance level. This is the breakout level that we need to hold above. If we drop back into this range again, then we start to throw up a little bit of red flag cautions. But as long as that's staying above, that is good. The diamonds, pretty much the same thing. There was our breakout on Friday on the jobs numbers, and then kind of a little spinning top here, just resting once again at the technical level of the diamonds, so the Dow breakout, I should say. The Qs, which have been leadership for a couple weeks now, still look great. I mean, we could go ahead and draw a line pretty much right there, looking like that's the ceiling on the Qs right now. So we'll be keeping an eye on that. We basically had resistance here, here, and then we stopped right here again today. So 4 times we've been touching on this level. But the way you look at that daily candle setup there, whoops, it looks like Qs might want to go higher and continue to be the leadership. The IWM, which was leadership at one time back here after the election, has just been going sideways in a stupid fashion. Not much really to glean from that. If I turn my crosshairs back on, we could probably just use that level as the prior high that we're looking to take out. So not a whole lot to get from the Russell 2000 at the moment, but the big guys, the S&P 500 and the Dow, are both technically sitting above their breakout levels, and that's all we're really concerned with. We're not really concerned with what's going on in politics, what's going on with the Fed, or anything like that. We just let the footprints in the sand dictate exactly what it is we want to go for. And for those of you who follow me on Twitter, I made a prediction back in the beginning of the year. I thought GDX might be having a really nice year. This was basically the level right here, or I guess we'll call it the beginning of the year prediction. GDX is really, really moving nicely, breaking out of some nice ranges, and was the leadership again today. And it looks like we'll probably run into some upside resistance around the 2570 area in GDX. So interesting note there. I just wanted to throw in that gold miner index and the GDXJ, of course, for those of you who like the extra alpha, the extra juice. Those are the junior gold miners. So that's what we got. Nothing really to get concerned about, nothing really to get excited about, just a close above the resistance levels that we want to keep an eye on, and that's where we are. Anything you want to add, James?
No, you pretty much encapsulated it, straightforward, easy to understand, as always.
Great.
All right.
I'll pass it back to you.
Don, back to me, and then we will get cracking with see how Miss Holly did today. So let me move that guy out of the way. And by the way, just in case anybody kind of want to see how's Holly been doing since we brought her online way back in January of 2016, well, this is pretty much it. And as we can see, the gap continuing to get slowly and slowly wider. So that's exactly what we want to see. Okay. Now let's talk about what Holly did today. So she showed up to the party today with 8 strategies, and we can see those strategies here. 2 of them are short, the other 6 longs, and we can see also that each and every trade count from each and every strategy. So these guys only spit out 1 trade each, and it looks like Wake Up Call was responsible for the majority of the signals today. So we had a total of 8 trades. All of them were long, except for 1 short that Putting on the Brakes put out. Interesting observation. And we're going to get further into detail about this in a little bit here, but one step at a time. So just reverting back to the SPY here on the intraday, and these are 5-minute. And due to customer request, you might notice, hey, there's different colors in the chart. It's just not all this pink color, and that's because everybody was requesting, can we have different colors for pre and post market? So that's what we have now. We've got the blue for the post and the pink for the pre. So in case anybody was wondering, that's what the new colors are. But interesting action on the SPY because we closed on Friday here, and we opened down here today. And as everybody can see, we acted like we were going to try to, tempt that area and go higher. Couldn't do it. Sellers took back control and drove the market down for most of the day. So all day, everybody's seeing red. Indices are down. Stocks are down. Interesting that Holly was predominantly long today. So on a total of the 8 trades on risk off today, a nice $1.09. So not too bad considering the fact that from a trading standpoint, think about it from this perspective. Hey, well, depending on my commission structure, I only have to make 2 or 3 cents on every share I trade to make some good money. Think about that. All you got to do is average 2 to 3 cents a share if you're on a pretty aggressive commission schedule to make very good money in the stock market. Doesn't seem like a lot, but to average that amount on every share you trade, a little bit different of a story. So when we look at Holly, and we can see the risk off graph here, pretty much straight up. Didn't really take a big pullback. A lot of the times we'll see a little bit of red here, and then we'll get into the green and hopefully push higher. So on the max side here, $1.09, and risk off, we can see a different tail. So we would have gotten profitable then went negative for a while, and then came all the way back. So a little bit wilder of a ride if you were just trying to decide right off the bat, well, should I go risk on or should I go risk off? And that's the wrong way to think about it. The reason we invented this was to give the users a chance to see what happens if we hold all day versus if we stick to our rule set. And if we get used to seeing this over and over, we can start to take nice little nuggets of information and parlay those into some additional gains that we can't necessarily see in Holly's reports here. So what do I mean by that? Well, think of going risk on a trade-by-trade basis. So I'm going to pull up AKAM today, which was kicked out by the bouncer strategy. Widen this chart out a little bit so everybody can see nice and big numbers here. Okay, so I've already drawn the line across from Holly's entry price. So here's the candle, the 5-minute candle, in which Holly said, all right, I think this is a good long idea. And then, of course, this one just works immediately. We go higher, we take a little break, go higher here, a little consolidation, and then on up to highs for the rest of the day. So when we look at Holly's blotter, risk off today, she took an 11-cent profit. But risk on is telling us, well, if we would have held that trade until the close, it'd be up 68 cents. But how do we know? How do we know to go risk on or risk off? Well, it's pretty simple once you get used to the modus operandi here. So let's say, for easy descriptive purposes here, we saw this trade. We're like, okay, I'm going to go 200 shares with Holly. So we pop in the 200 right here, and behold, immediately in the money. And so, nice. Because as traders, that's the first part of the equation. We don't like to get into things and then have them go against us and be sitting there in a down position. Ideally, we'd like for things to go. The sooner the better. So if we look at why Holly got out of the trade here, and focusing on this exit reason column right here, I'll just make it a little bit bigger, but it's at the end here. So we can see Holly got out on a profit save. She has the right to get out of a trade if she thinks it's getting a little volatile. So we can see entry time 7:27:54. She only held that trade for a little over 2 minutes. Up here, started getting these wicks, and she gets out. Now, what I will say about this functionality is the prime reason for its development was that Holly would let a winner back off and get red, turn into a loser, because when she first came online, she would only get out for 3 reasons. Profit target was hit, stop loss was hit, or the timed hold had expired. So see, that opens up the door for a winner to turn into a loser. So we brought the new profit save and reduced risk functionality online, so that when we're interacting with Holly, we get into 200 here, and we're like, Holly just got out of this position very quickly and took 11 cents. What should I do? Well, from a trader's perspective, from my perspective, we've got a nice roadmap laid out right here. We've got our stop loss. We've got our entry price. Now, it went immediately, but it never even acted like it was going to come down to our stop loss. So when we're in a position like this and we see Holly getting out on profit save, we have to make a decision. Am I going to stay in and try to make more, or am I going to exit with Holly? But the best thing to do, in my opinion, is to do both, because this is going to teach you moving forward. So you're in 200, you see Holly getting out, peel out a half, lock in 100, give the other 100 back to a flat. Okay, in which case you would have stayed in the trade for the remainder of the day because it never came down to this line again. And on that second 100, you could have captured an extra 57 cents. And that's a pretty big swing in alpha there, all right, because Holly's strong suit are her statistically weighted entries, all right? That's what her specialty is. So learning to work with Holly, the man with the machine, let Holly make the entry calls, Get used to going risk on when it's applicable. And that's really the best way to do it, is do half and half until you get very comfortable. But there's nothing wrong with doing half and half all the time. It's just whatever you feel comfortable with. So this is a classic example of staying in the trade longer, using some trade management, and making more than Holly did. Now this next one, same thing, just happened to be the only short trade that was issued today. So we can see here, the entry was right here on this little spiky wick. Holly got short. Same thing, profit save. She takes a 12-cent profit. Risk on profit, 47 cents. Same logic applies. The pattern is just inverse. So we can see she stayed in this one about 10, 11 minutes. So on that little wick right there, she's like, I'm going to take my money. But once again, same thing applies. We could cover half, give the other one back to a break even, which once again would have never triggered. That was the one excursion through that point there. And we could have collected more alpha than what we see Holly reflecting in risk off. So these are the two examples today of going risk on some Holly trades. Other than that, looks like the profit or the time stops were keeping us out of trouble, because here we see 25 cents on the risk off. Had we stayed in it, another 10 cents, the profit would have shrank up to 10 cents. So really keying on when the risk on values are larger than the risk off, or deciding when to go risk on. And usually we have a couple of examples on what we call a trade around, where Holly got stopped out, but then the stock turned and either went up or went back down to the entry position, and there was a second time to maybe interact with that stock by setting up some price alerts. But we did not have any of those today. But other than that, a very clean blotter is what I would like to call this blotter from Holly today. Low trade count, over $1.09. So, as I said earlier, from a aggregate standpoint, depending on how active you are, you only have to average so many cents per share. And with Holly today, what is that? It's over 10 cents a share. So just something to put it in a little perspective there. All right, so that's pretty much it for Holly. So what I'd like to move on to here, and want to keep an eye on the time, because I know we probably will have a lot of questions towards the end of the webinar for the newer people. So I've got something really cool for you guys. And today, these opportunities don't present themselves a lot, but today was a classic example, so I'd really like to show you guys. Give me 1 second here while I rearrange things. Okay, so this topic may ring familiar from some of the past webinars. These windows, or this window in particular, has only been out for, I don't know, maybe not even quite a month yet. But it's turning out to be a very, very interesting window to watch. Let's start by kind of looking at the market again here. Okay, so as we can see, gap down on the SPY, never could recover, tried right here, got back, cycled down all day. So all day on your indices, you're seeing pink or red. The market's down, the market gap down, it's down. I'm seeing red everywhere from a trader's perspective. Well, what do you think most traders were thinking today? Well, should I go counter? I've always been told I shouldn't go against the trend, and the trend seems to be down today, so I guess I should be focusing on the short side of the market. A lot of people were probably thinking that exact same thing, or just in a state of, I don't really know what to do here. Now, interestingly enough, on a day where there was perceived selling, the indices are red, lots of red everywhere, guess what? There was more selling than buying in the market today. But the majority of that selling was in stocks that were doing normal to slightly above or slightly below normal volume. But if you follow the volume today, there was literally a buying bonanza in the large caps. Perception of selling in the overall markets, and there was, but where the party was, where the volume was, there was a little bonanza going on. And institutions were sucking up these big cap stocks left and right. Funny how that works, huh? So on a day where there was perceived selling, the institutions are buying like crazy. But guess what? You would never know that. You have to follow the volume. So real quick here, just to show everybody what we're going to be looking at here. What's producing these stocks? Well, sure, most of everybody listening to this webinar right now, whether you've used our product or somebody else's product to find your trading setups or whatnot, everybody always throws in average daily volume. I'm just going out on a limb there, and I'm thinking that's pretty much the case most of the time. What you will notice in this configuration is there is no average daily volume. Kind of taking a different approach here. So we're mandating high 1 minute volume. We're throwing our earnings filters in here because, well, we don't really care if the stock reports earnings. We're more concerned with the stocks that don't report earnings, that aren't really stocks, ETFs and iShares. So this is a little workaround that we use, which by de facto weeds out all the ETFs and iShares because they don't generate any earnings. So by saying stock has to make or lose a penny a share, by de facto we weed out all the ETFs and iShares. Now we're taking a little bit different approach to make sure these stocks are liquid. I'm saying the minimum market cap, $5.4 billion. And so if we just kind of take a look at the history here, if we scroll through here, you're going to recognize a lot of these names. And even if you don't recognize the symbol, when you do pull it up, you're going to recognize that it's fairly liquid. Lots and lots of stocks, ladies and gentlemen. And look, I'm not even through the first or through the last hour of the day here. Matter of fact, let me check my number here. Yeah, 126. This ticker had 126 large cap stocks coming through it today. Now, you may be asking, okay, Jamie, out of all these stocks that came out today that were coming through this thing, how did they finish up? What did they keep going up? So what I've done here is earlier I took the liberty of doing this, and you might want to just take a note of this because it's real easy to do. If we're viewing the history here, remove the check from real time, it's going to load up the entire history for today. If you ever want to extract that information, you just right-click and you say Save Contents. So I saved all the activity into a spreadsheet. I isolated the symbols, and then I threw them into our custom list functionality here. So here's the list I created today, 2.6 liquid, 126 stocks in there today. So here's a top list with no filters because I'm only pointing to that liquid list. So if I click on symbol list, you can see here only the following list, 2.6 liquid list. So I'm seeing all of those stocks on this list here. Now, this is where the stock is in its daily range. So if it's all the way over here, it means it's hitting highs. If we see a little bit of daylight here, it's very close to its highs. So I'm sorting by this column here. So just take note. Look where all of these stocks closed today. We have to go all the way to the bottom here to find the ones that didn't close in a profitable position from the open today or prior close. So out of 126 stocks that guy spit out to me, 1, 2, 3, 4, 5, 6, 7, 8. We'll call it 9. 9 out of 126 didn't finish higher from the prior close. Now, that's pretty powerful. That's pretty dang powerful on a day where we gap down and continue to go down for most of the day. This is the classic case of being able to pull up the rug and seeing what's going on underneath the rug when the majority of people watching the markets and attempting to interact with them, they don't even know that there's an underneath the rug. They're just looking at that top layer, same old stuff that they always look at. So once again, on a day where the market cycled gap down, cycled down, this was really where the party was at, and these stocks were being heavily purchased, and they're all very liquid. Now, I say that, I need to do a little bit of filtering here to get out some of the crazy, weird ones that show up that don't do any volume, but for the most part, these are going to be highly liquid issued.
Well, of course, you want to drop a copy of that into the chat window. A couple of people certainly are asking about it.
Absolutely. I will make sure that I drop that, or not necessarily this one, because this is just for demonstration of what this guy put out today, but I will gladly drop this guy and his counterpart into the chat window before we're done here today. So, once again, you don't have to download any cumbersome lists or anything, just right out of the box. But yeah, I'll definitely put this one and its counterpart in there before we're done today. And I think we're still doing pretty good on time. Still got 30 minutes to take questions, look at charts, anything that the audience might have an interest in today, since I know some of you are going to be open house attendees. So I officially declare the floor is open.
All right. Is there a way to get an end-of-day data download from your service?
Well, end of day for a specific configuration, yes. So, kind of just as I just showcased here, I can remove the check from real time here, and it will start showing me all of the action that transpired. Now, if I'm understanding the question correctly, you would just right-click and save the contents, and that would only be for this window. Steve, am I understanding the question? I think I can.
So there's also an export feature at the end of the day. I think you could have an export, right? Save contents into a spreadsheet.
Right. We just come down here and save the contents, and all of the symbols that came through that window today would then be stored in a spreadsheet format, very similar to what I did here. So when I save that contents into a spreadsheet format, let's see, there it is. Then it's real easy just to open that file up with your favorite spreadsheet program, and then you have all the data for that ticker in the appropriate cells. Okay, so
let's see here.
Well, Sylvia, the window that I just showed you today, these alerts were all coming through in real time today. So the whole point is that, if you're watching this window, you would have been given tons and tons of ideas for stocks that went up today in a down market. So, that's the gist here, is watching this guy in real time and, fleshing it out as the day unfolds. Now, that doesn't mean that you can't take some of these stocks that came through this window that might be things to watch for the next day. That's more of what we call an end-of-day scan. But a lot of these windows that we showcase and that people use, not only can you get good use out of them intraday, but then they also produce good candidates to check out when the market closes and look at the dailies for expectations on maybe multiple day holds or whatnot.
How much are the price ranges for the different services you offer? How many of the features we got? Okay, for the open house features, you basically got all the features, which is the premium subscription. The standard subscription is basically everything that you see except for using the Holly AI and except for back testing strategies. And also the last thing is what we call price alerts. That is not available on the standard subscription. There's a pricing page. I can send a pricing page to you so you can see some of the breakdowns, some of the different breakdowns there of the different services. There you go.
Right. And when Steve's talking about price alerts, you know, the premium package, not only do you get access to Holly, the artificial intelligence, and a couple of other custom windows, but this is another feature that you get access to, the ability to take stocks. So, for example, if I just pull up a random stock here, Tesla was on fire today. So we can see Tesla, last bar of the market. The high was 257.82. So if I came up here and said, okay, well, I definitely want to know when Tesla gets to 258, I can just right-click up here and say create price alert, and then we can make sure the proper price is in there. Say if it goes up or down, rises or falls too. I want to go long or short. And you can even create notes in here. So Tesla, momentum, whatever you'd like to put in there. And then once you do that, you'll notice that price alert will show you the date you created it. It will also have the date when it was triggered, and you can see the status over here as to whether it's working or triggered. But this is an excellent way to day trade, or excuse me, to paper trade. For the newer folks that are coming in, typically you have to have access to a platform, and then you call them and tell them to put you on demo mode, and blah, blah, blah. Well, with our platform, you don't even have to have that account. You can get to demo trading right off the bat using our price alerts.
What is the difference between Alpha, Predator, and Holly alerts?
Good question. Good question. So if you kind of direct your attention over here to the channel bar, if I click on Alpha Predator, and by the way, this channel was just recently added. So Alpha Predator originated as a top list which shows you things that are moving big. Steve, would you call that an accurate description of the original Alpha Predator window? Things that are happening?
Yeah, it's things that are moving big today, but are kind of positive on all time frames, up for 5 days, up for 5 minutes, up for the day, having good volume, just things that are basically in motion across many different time frames. Versus the Holly trades, you could have any strategy come out of there. There's 35 different strategies that are all different from Alpha Predator, and they basically fire or they don't fire depending upon what happened the night before on the back testing.
Right. And to add a little bit, one more informational nugget on top of there, really the biggest thing to point out about Holly is that these, well, number one, if you asked 100 traders, hey guys, answer a survey. One of the questions is, how are you using statistical probability in your trading plan? Well, you'd probably get a lot of blank stares. And maybe 10 out of 100 would go, oh, yeah, I use statistics in this capacity or that capacity. But I assure you, most people out there trading, when they see a setup, they're not thinking to themselves, I wonder what my statistical probability is for this trade to work. They're predominantly focusing on the pattern, which is what we traders do, right? But you can't get overexcited about a pattern if all the other factors aren't lining up. Well, we know that each and every play that comes out of Holly's, let me just do this. Let me reopen my other layout real quick here. Give me 1 second. Instead of retooling this one. So taking a look at the strategies panel here when it fills in, for example, wake-up call, 5 trades out of that one today, performed at 80%. 4 out of 5, not bad. Well, we knew coming into the session that anything coming out of wake-up call, according to the past 40-day backtest, had a 51.1% chance of working. So we knew the statistical probability right off the bat. Now, obviously today, this guy overperformed significantly. All these other guys, 58.3%, 63.3%, and 61% respectively, well, since they only spit one out and they all hit, these guys overperformed today. 100%, 1 of 1. So the beautiful thing about Holly is you know what your statistical odds are right off the bat. Simple as that. It's like card counting, but for the markets, The guy who's really sharp and can count cards and is a statistical whiz, he can beat the house long term. That's why they will kick you out if they catch you, maybe even worse, because they know that the guy with the stats on his sides, he'll take the advantage away from the house, right? So we're applying the same type of methodology, but in the market. Now, on that topic, if we just revert back to this Holly trade here, well, not the prettiest range break today, but a range break nonetheless. And what I mean by an opening or a range break is that the stock had put in its low down here, even though it was a nasty, nasty wick, and it's high up here, and then the stock becomes range bound. Well, it pokes out slightly here, then comes back down, and pokes its head up again, and it pretty much hugs that line all day. And then at the last, the buyer comes back out and takes it higher. So a lot of the times, keep in mind, this statistical probability, it's good for the day. Sometimes, like we saw on this trade right here, let's see, actually, yeah, on Holly's entry, boom, off to the races. But notice how it starts hugging that little area right there. If I saw this occur, if I took 200 here, and then we tried to break out here, and then, just kind of going sideways, hugging that line right there, that would have been highly interesting to me, because later on in the day, if we pop through this line with a lot of volume, well, then that means something. And the only reason that we were ever in tune with it is because Holly had pointed it out to us earlier. So, there's three things I like to talk about when you're sizing up a trade entry. Well, we've got statistical probability. A lot of the times it's in the same pattern, or it's creating the same pattern that you like to see. So that's another positive factor. And then we might notice that the volume is extremely high during this little consolidation period. So now we've got three positive factors. Well, a trade can work on any one of those merits on its own, but when you're able to string two or three together, well, even better, because that's more and more, confirmation that there's no guarantee, but I need one good factor, and now I've got three. So when we can find those types of trades, confidence is a lot higher, and typically the performance, we can make more than Holly can on that trade because we're reading the charts, we're reading the volume. Holly can see charts, but not like we do. It's more of a shotgun scatter, circle-y approach. But by working with Holly and managing our exits and deciding when to take more of stock based on those factors that I was describing, that seems to be the best way to function with harmony with the technology.
All right, somebody has a good question on the premium alerts. We talk about a premium alert called RBI and GBI. Basically, RE, that's just it's a pattern recognition system that we've got built in. He'll show you how to launch it there. It basically means red bar ignored and green bar ignored. Those are 5-minute or 15-minute basic scans where if you have 5 green candles in a row, then a red candle, and then a green candle again, it can typically be a continuation pattern. So it's something that we've used in the past. 15-minute and 5-minute candles can be used either to the upside or the downside for continuation patterns. So red bar ignored and green bar ignored.
Right, and the windows aren't populating right now since it's post-market. But typically, these windows will be full of different stocks and different time frames because we've got the 5, 10, 15-minute. I've got it on 15 minutes. So this would be an example of a red bar ignored. You got the green, then you got the red, and the following green. So it's basically saying red bar ignored, sign that it might go higher. Green bar ignored, the exact same, but to the opposite side.
Okay.
Let's see, just scanning over the questions here. The win percentage is the actual percentage gain in a particular stock or just the probability of win percentage? So I'm assuming you're referring to the win percentage here for the strategy. So coming into every session, when we see the win percentage, 77.4 on bond shorty, of course he didn't fire any trades today, but that was the win percentage based on the back test that Holly completed the session, the night before. So Bond shorty was expected at 77.4% accuracy today. Now, had it fired a trade, what would it have done? We don't know because it didn't fire anything. But these are expectations, and then we show you the win percentage column today when the strategy is active to show you how it's performing today. Okay. So I'm looking at David's question here, talking about restricting Holly to using a particular stock only per strategy per day is an unnecessary artificial restriction. Now, Holly will use the first occurrence. So if quarterback spits out PPSI like it did today, and then PPSI can repeat, that configuration string and that alert string can repeat. So for backtesting purposes, we use the first occurrence of each symbol. We do not fold second or third occurrences into a backtest right now. I think that's what you were talking about. I could be wrong. Okay, so is Holly more profitable over time with a risk on or risk off?
Both.
Right. Well, Steve, like you and I do all the time, we go to the back office and we say, show me the chart, just risk on. Show me the chart, just risk off of Holly's performance, right? And of course, when you accept more risk and you're successful, what do? You get paid more. You get more reward. If you're not willing to accept as much risk, can't expect that yield curve to look as juicy as if you're just holding risk on all the time. Make sense?
Does to me.
All right. Well, hopefully, Mr. SW, that makes sense to you as well. Okay, so for this week's trial, should I be able to log in with my previous login data? Now, if you had an old account, probably not, I would think.
No, you're going to need the open house.
Right. How complicated is it to hook up with my IB account? Well, once, if you're just referring to trade ideas in general, it's a standalone product, so it operates independently from IB. Now we're getting very close to releasing the add-on module for IB, which is called Brokerage Plus, and it's not out yet, but when it does become available to you, it should be, I'm sure this will come back to haunt me, but it should be relatively easy to connect that thing to your IB account. The ones we've developed in the past, click a few buttons, you're connected, off to the races.
How do I see and replicate what you're doing on my platform? Well, you might want to show them how you can launch an AI window from the simple toolbar, so you don't necessarily have to be on the AI channel if you want to pull up an AI window. It's just new AI.
Right, and we developed the channels for, to try to make it easier for people to get to learn and see what's out there. Of course, any window that we have can always be spawned from the toolbar just by going to New, and here are all the windows that you have access to, right? So, don't have an AI window open, we just click right here. Holly's strategy panel pops up. Now, of course, this is the strategy panel. Of course, we'd like to see all the trades as they're unfolding in real time. A couple of different ways to do that. My preferred methodology is just simply to right-click and say View All Trades. Now, you can set this up to have a different one of these for trades that are open, trades that are closed. It really just depends on how you'd like to view the data. A couple different ways. So that's how easy it is to spawn a new Holly window.
Correct. TI is not a trading platform. It's just a scanner. But we do have a new version coming up where if you're with Interactive Brokers, we're almost done beta testing. We'll have a brokerage robot that you can fire off trades the moment they come out of an alert that you like. So we're getting close. We'll have some more documentation, some more marketing, and some more discussions on that after Open House for sure.
Right. And just for clarification, the Brokerage Plus add-on for Interactive Brokers is really the only one we have for the big retail. There's not one for Ameritrade. There's not one for E-Trade. There's not one for Scottrade. Interactive Brokers is the place where where that thing will be live. As far as do we recommend IB, everybody has to make their own decision, and pretty much that decision is always going to be based on one crucial factor, the big factor that impacts all of us, unless you're trading at Robinhood, and that is commissions, right? So the lower the commissions, the better. Interactive Brokers does have a per-share program, so you get a lot more bang for your buck on your commission dollars going per share than a flat $7.95 a side. It makes it somewhat more difficult to make money. Relatively speaking, of course, we urge everybody to do their own due diligence, go to IB, check out all their policies, so forth and so on. All right, so just scanning the questions here. Let's see. Well, Ginny asked the question, is Holly programmed to kick out trade suggestions that are more for scalping purposes? Well, funny that you say that, because, Holly is going to give you a statistically weighted entry. If you take that trade and you're in the money and you want to say, I'm taking my money, thank you very much, you can do that. A lot of people ask the question, well, these aren't swing trading plays, are they? Well, first we have the statistically weighted entry, and if we're in the money in that position, the close is approaching. Steve, what do we do? Well,
we look left.
We look left on the daily to try to figure out, okay, what are our expectations? If I was holding a KAM into the close, then I would notice that, well, if we break the high of the prior day, we might be good, but there's no way, there's nothing just jumping out of this chart telling me, stay in it, get out, right? Now, a lot of the times it's a lot more definable. If we were way above the highs here in uncharted territory, it would be a different story, but the general rule of thumb is just to look left on the daily to try to figure out where the support and resistance is, because that's where the thing's going to come to a complete halt on the intraday, or if the volume is there, push through.
Yeah, it becomes the trader's discretion as to whether or not you want to take it into a swing trade. Holly will never take a trade home overnight for obvious risk reasons.
Correct. And somebody was asking the question about recorded sessions. If you go to our website, and let me just pull it up just for easy nav here. The easiest way to navigate our website, other than downloading the product, which is always going to be right here when you first come to the website. Download standalone client, download the web version. Easiest way to navigate our site is just to grab the scroll bar, come all the way down to the bottom. Here you have all the topics of interest. So all the webinars are recorded and archived, and you can access them just by clicking on this link here. The support area is great. This is also where you sign up for training sessions. Somebody was asking the question earlier, is there an online manual for trade ideas? And we've purposely kept everything online so that if you are in Configure, for example, got a lot of resources available within the product. I got this alert window, I right click, I say Configure. We've got this wonderful search tab embedded in the product.
Search tab is your friend.
Look how many alerts we have. Look how many filters we have. It's a very long list. You don't want to spend your time manually flopping around, so we made our own little in-house Google. As soon as you type a keyword in, it shrinks the universe down. Let's say you need an exact definition of how this filter is working. All we do is highlight it, click Help, takes us to the website, right to where that specific alert or filter definition is located for you. So very easy to access all the definitions of the alerts and the filters from within the product. And then since we're in here, we've even built some little tools to help you make sure that you're putting in the right settings. The gap filter is a good example. Everybody knows what the gap is typically, the change from prior close as compared to where the stock opened the next session. So if we put a 2 in this box, notice that there's nothing in English down here. If I put a 2 over here, well, that's going to get me this. The open was at least 2% above the prior close, 2% or higher. What if I wanted 2% or lower? -2 over here, which can be confusing if you don't have this little cheat mechanism here. Put a -2 in the max field gets us this result. So we've tried to make it as intuitive and as easy to use as possible by creating these little tools within the product so you can get any definition. You can also make sure you're inputting the proper filter settings at any given time as well. And believe me, that will save you hours and hours in the future when you think something should have shown up and it didn't because you had the wrong filter setting. This little guy will help you avoid all that pain in the future. All right, so we're 5 minutes to the top of the hour. Steve, anything you want to add before we go to Scott?
No, just thanks to you all for showing up for Open House Week. Keep showing up at these webinars, asking questions, live trading room, live chat on our website. We're here this week to try and give you guys all the answers we can.
Absolutely. So, Scott, if you're ready,
Unmuted.
for you.
Yeah, thanks, guys. Couple things. I want to thank everyone for attending and remind everyone that we've got a few new things going on. We did a soft launch for our podcast in December, and now we've been doing it for a couple months now. And every Friday we release a new episode, Friday afternoon after the end of the week. And best way to get the podcast is just search for Trade Ideas Podcast inside your favorite application that you use to listen to podcasts. So if that's iTunes or Stitcher, Overcast, iHeartRadio, TuneIn, whatever you're using, just search for the podcast. It should be in most of them. I think if it's not in one that you use, if we don't know about it, hasn't been submitted yet, shoot us an email, let us know. We also send out a broadcast to our email list on Fridays after it goes up, so you can always listen to it online that way too. But hopefully you all subscribe it, like it, give us feedback, and support it. We're looking to communicate with you all in that way. We are still registering for the open house, so let your friends know. The open house is going on. It's $8.88 for 5 full days of access. We're going to let people sign up through the end of Wednesday for that, and they still get 5 full days. So if your friends register, or if you register Wednesday afternoon, you still get Thursday, Friday, and then Monday, Tuesday, Wednesday the next week. So you still get 5 days of access for the premium package. But the best time to do the open house is during this week when we have extra hands on deck in our trading room and all that kind of stuff. You could have, Jamie, could you move on to the next slide there for the open house?
Sure.
While you're doing that, I'll remind everyone that there's a handout in the handouts panel of your GoToWebinar interface. Click on that little plus next to where it says handouts, and you can download some helpful slides with this information as well. So the open house is going on all week. We have got extra team members in the trading room all day long. And webinar tomorrow, if you've signed up for our Trade of the Week list, you're going to get invited to that. It's the Trade of the Week webinar. So just make sure you're signed up on the Trade of the Week list, and you'll get that invite tonight and then tomorrow. If you don't get one, just email info@trade-ideas.com. Customer service will sign you up for the list. As a thank you to everyone for attending, we give a discount out. This is also in your handout. You can use that code that you see on your screen, all caps, just like it is there. And that'll save you a big 15% off your first month or year of Trade Ideas Premium, or 10% off your first month or year of Standard. And remember, the code is Holly2Trade, just like you see it, all caps. So the big difference between Premium and Standard is access to Holly, the AI, and also our unlimited backtesting using our event-based backtesting module, and our price alerts and some other advanced features as well. However, even Standard, both Standard and Premium, include a full hour of one-on-one training with our gurus like Steve and Jamie and Andy. And just sign up for Trade Ideas. As soon as you become a subscriber, go to support, click on training, and book your preferred time and date for the training. It's good stuff. It's the best way to get a head start on the platform, because then you can figure out the best way to configure it for your own style of trading, risk tolerance, and all that kind of good stuff. Good gives you a good head start. And the other best way to get a head start is attending our webinars and hopping in on that trading room. The various trading rooms open every day, so go to that. And if you have questions, shoot us an email. You can reach out to Jamie or Steve directly with the email addresses on your screen there, or send us an email to info@trade-ideas.com. That's the help desk software email. And if you have any billing questions for your subscription, you can reach out to our phone number and get that, or just shoot us an email at info@. Follow us on Facebook. Facebook.com/TradeIdeasPro is where that is. If you like us on Facebook, you'll find some additional content in your Facebook feed. Sometimes we don't post elsewhere. You can share that with your friends. You can follow Steve Gomez on Twitter at TodayTrader, or Jamie Hodge at QuantBot, and Dan Merkin, our CEO, is at TradeIdeas1. We also have at TradeIdeas and some other ones. If you follow one of them, you're probably going to see the other ones, so just go ahead and follow them all. Thanks, guys. Recording will be up in a little bit, and you'll get an email to your inbox you used to register with tomorrow with a reminder of where to find that. So thanks, Steve. Thanks, Andy.
All right. You're welcome.
Thanks.
See you tomorrow.
Thanks, everybody. Have a profitable week.
Yeah, thanks all. Later. Have a good one.